Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Wednesday, January the 4th, 2017. My name is Doug Kay. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place for whatever the market throws at us. Then we determine what the market is doing and find which one of our plans best fits the market and execute on that plan. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and every trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's take a look at the news. Of course, today is Fed minutes. So we don't really have a lot of news this morning other than what came out in Europe. Things were pretty rosy. The market is just trudging along, creeping up overnight, coming up and testing yesterday's range high. We do have total vehicle sales all day, so that will be leaking out during the course of the day. And then we've got the big news, which will come at 2 o'clock Eastern time, which is the FOMC minutes. Other than that, nothing really scheduled, so just what you see in terms of headline news, if any. Let's just take a look at what happened yesterday. Yesterday, our main hypothesis was an open auction out of range, a push up into 57, and then finding responsive sellers and rotating us down into the prior day, testing the range low and pushing through to the 36. And then Hypo 3 was an open auction out of range, and then a rotational day chopping between 57 and 36. And we kind of get a combination of those two hypos. I mean, Hypo 1 definitely kicked in, and there was a nice short off of the FUBAR, Mr. Sneaky. I actually got short 58.75. Too bad I didn't hold it, as you know, it got out at 56.50 because it was just slow moving yesterday. But what does it do? It rotates all the way down, and then we fought the value area high from yesterday at 40 and just basically chopped all afternoon. And then what happens? The buyers, the traders with the more expensive seats step in. You can see we get an OTF activity step in on the close, and what do? They rotate us back up, and we close in around the 52. Remember that 52.75 was the first microcomposite VPOC that we found value at on this move up into balance. So all in all, it wasn't a really big day. It was pretty much choppy all afternoon. It was tough to trade. I didn't get very many trades off myself, but for the most part, it was Hypo 1 and then Hypo 3 kind of kicked in late in the afternoon. So let's step further back a bit. Let's take a look at the macro to the micro. I always start my day with a basic candlestick chart, a 9 EMA, 20 SMA, and what I'm looking for is where we are within the different time frames. Yes, I am talking, Winston. 1 second. Yep, Winston's got to switch to microphone. He's on phone. Okay, so taking a look at the macro to micro, good slope, good separation, multi-year trend. Then at the end of 15, beginning of 16, they challenged it, and then they took it back. And then we had this falling 3 pattern that we were watching at the end of November for continuation. This is a continuation pattern. 1 great big green candle, 3 red candles, and then an engulfing green candle for the continuation. We went up to make new highs in December, and then so far in January, first day of trading yesterday, we opened the year at 22.40.75, and so far we're holding that and just grinding higher. We are getting a continuation pattern. Going to the weekly, you can see that the weekly is in a trend mode as well. You've got good slope, good separation. We did get a Mr. Sneaky here 2 weeks ago, and then last week we had that sell-off into the end of the year, and now we've got another inside bar. So we're getting into this consolidation pattern, but right now, until we get below the 22 area, the trend is still to the upside. Going to the daily, you can see that we were trying to roll over, and then so far this year they took back the trend. They're holding. We do have a MA squeeze going on. This is a decision point, and whether or not we continue and go higher and get our slope and separation back, or whether or not we break down basically below that 22.50 area. Going to the intraday, you can see that overnight we got a nice trend starting. Prices paralleling the 9 nicely. We've got a move up on the daily with slope and separation. 1 second. Can someone just help him out on how to switch to mic and speakers? So the trend is still intact on the 4-hour as well. Going to the 1 hour, you can see trend is still strong on the 1 hour. Going to the 30-minute, we have a nice trend going up. We started to challenge that trend, but we did not break below the 20 SMA. We've lost slope and separation, but we're holding. So I'd be watching this 55 area to see if this breaks the trend or violates the trend. If it does, we have a naked cross down here at 48.25, and that is on the 30-minute. Just writing these down in my journal. And going to the 15-minute, we kind of went sideways and chopped, and then they started to get continuation. Now we're testing the 9 from above, but right now they're holding the trend, and again, that 55 area will violate the trend and get a possible start of a downward trend. Going to the 5-minute, you can see that we have started to roll over on the 5-minute, and we're below the 9 and the 20, so the trend is being challenged as we move down into the lower time frame. All right, so let's take a look at the structure of the market itself. You can see that we had this balance that we created after we broke out of the longer term that we spent most of our year in last year, and then we consolidated, we accepted value just below the 2200. Then we had this beautiful breakout candle, and then gap up and go, and we came up, and basically the last little while we created balance, okay, between the 6750 and the 5150, and we fell out of that balance at the end of the year, and then yesterday they got back inside a balance. We ended up with a doji day, so you see the opposing force coming in on the doji, and we come up. Where do we come up? And we're trading right back in around the microcomposite VPOC at 57. 5250 was the former microcomposite VPOC early on in this balance. It's also the 3-day value area high with the longer time frame value just below it at 51. This is going to be our warning line, this 51 area. Below that, then we could get moved back into the 3-day balance, which is in around 44. It's still pretty blunt here, so I'm still expecting a lot of rotations in this area as we mature the auction. But right now we're accepting that value again, and I'll be watching the range high from yesterday, the 59.50. We've come up and tested it, but been unable to break out of yesterday's range so far. So if they can't break out and get continuation up towards that 66.50, then we're likely to have to come back down and pick up buyers, and they're likely to rotate down to the VPOC from yesterday, which is right around the 52 and where we closed yesterday. So taking a look at the overnight, overnight inventory is net long to neutral, but more net long than anything. We have rotated down. We're only a 1.5 points off of the high. We've got 35 minutes before the RTH session opens, so we can very easily go up and break and put in a new overnight high. But for the most part, right now, our overnight high is up here at the 58.50. Our overnight low is 51, not likely to extend down. And our overnight VPOC is 55, not likely to change on that as well. And then we have an LVN here, 55.75, but the big LVN is down here at 53. It's right 2 ticks below the value area. So I'm going to be using the value area as a trade area. Below that, I'm targeting the 52 and take out of the overnight low of 51 and move back towards the midpoint from yesterday. There's an LVN and the IB high and the VWAP all right here at 48, 48 and a quarter. That will be my next trade area. Below that, I'm looking for a move down to test the daily ATR downside target and the value area low down here at the 42.75 area. So our 20-period daily full session ATR is 1771. It's still expanding out a bit. So off of the high overnight so far, 58.50. Our daily downside target is 40.75. 40.75 just happens to be our year open. Is that right? 58.50 minus 1771, 40.75. Yeah. And then off of the bottom, our overnight low of 51, our upside ATR daily target is up at 68.75. And 68.75 is just below that 69.50, which is last week's high, and that double top. We have a double top right now at 69.50 with the all-time high, just slightly higher than that. 59 is going to be our breakout level, and then the 38. It's a 38.75. 38 and a quarter. 38 and a quarter will take us outside of value for the last 3 days, and it'll take us below the CLVN here, and I'll be looking for that move back down into the naked VPOC at 36 and 34, and coming back into that next big target below, which is this one right here at 34, and possibly even down to the 37. So 38 and a quarter is going to be our key line in the sand. And below that, we're looking for a bigger retrace and continuation down into this real thin area down here and back towards testing the 2200 level. Remember that the 50% retrace of the significant breakout candle, which always gets retested, is 1950. So once we move down into this thin area, it'd be nothing for us to push through 27. 27 is the bastion of last hope for this continuation move up. If they get below the 27, then we're looking for that move back into the 1950 and more likely back into test the 2200. Remember that the next big target below that is all the way down here at 21.98 and a quarter, where they accepted value just before the breakout on the 7th of December. All right, so looking at the market, I mean, the market refuses to die, to roll over. So we were looking for that rollover yesterday to pick up the buyers. They did. They found the buyers, and they have moved up overnight. So we are inside a range, inside a value. So my main hypothesis for the day is a open auction in range, a move down to test the value and to take out the naked VPOC, and somewhere between the 52 and the 48, I'm looking for responsive buyers to step in. Initiative buyers to step in, and then rotate us back up and break out and come up and take out this this double top at 69.50 and go challenge the all-time high. We're not likely to do that until the afternoon. Remember, we've got FOMC, so I'm looking for a move in the morning and then chop, and then waiting for finding balance before the FOMC minutes come out, and then the move from there. So I'm looking for them to fail in the morning, come down, and then chop around inside of value, maybe even come down to the 42 and basically go sideways, and then on the news break out and move up. Hypo 2 is a opposite trade, a open auction in range, a false breakout to the upside, come up, and somewhere up here, without taking out the double top, find responsive sellers, and then rotate us down into the prior day range and value and chop around in here, and then fail on the news and come down into 36, possibly down to the 27. So basically, a rotational day, sideways balance, and then failure on the news, depending on what the news. And Hypo 1 and Hypo 2 are basically leaning against whatever news and how the market reacts to that news in terms of the Fed minutes, whether we get the move up and take out the double top and put in a new all-time high, or fail on the news and move down and make the move back towards 27. Hypo 3 is basically going to be the same thing as yesterday, which is a rotational day, but now the rotation will be between 69.50 and the 42 area, and just chop large rotations as the mutual funds and the OTF are positioning themselves for the beginning of 2017, and basically chopping up and through the high of yesterday and back into value, and just basically chopping around like we did yesterday. And then Hypo 4 is a open drive, early break to take out the overnight high, a drive up to 69, chop around in the 69, and then on news pop up and get a continuation day and a break above the value and above the all-time high, and come up into the 22 80s and close somewhere up here in the 80s. So basically a trend day up on news with the breakout coming early. And then I have to put in an alternative fifth hypo because of everything that's going on. And a fifth hypo would be a failure to break out of range, a push down early, travel through value, break below the 39, come into the news down here in the 36, and then fail okay, and come back down into this 22.19, 50. It should be 50. So a failure day and a move back into this low volume area of the profile. So those are my main hypothesis. The most weight goes on to the first three, of course. I think we'll make the move early, then go sideways, whether it's a move back into value or a move up and take the news in above the range or in range is what basically I'm looking for, one of those two. That's going to complete our pre-market session. I'm a little bit all over the place this morning. Just I was late to my desk, and this new format I got to get used to. Anyway, as always, trade well, trade safe, and we'll catch you on the flip side.